Well, we had rate decisions from Brazil, Mexico and Chile last week. So let's see how these currencies are trading this week. I have Benoit Anne, Head of Emerging Market Strategy at Societe Generale in London on the line. So let's begin with Mexico. The Mexican peso hit a 1-month high as US retail slowdown eased concern that the Fed will actually curtail stimulus, and the president announced a $315 billion infrastructure plan. Now, many will be closely watching the US to see how to trade this pair. So what specific US data will you be keeping an eye out for, that you actually think will have a significant impact on the peso? And of course, how do you think the reforms will have an impact on this currency?
Well, when you look at the market these days, and including LATAM currencies, the key driver is, I'm afraid, nothing to do with the specifics of any LATAM country or currency, but we are in a top-down market environment, meaning the global macro factors are the ones that are prevailing. And right now, what is happening, everybody is watching the Fed policies and the signals sent by Ben Bernanke. On that basis, we are seeing a bit of a bounce in currencies at this point, including LATAM. The BRL is the top performer in the region right now, followed by the Mexican peso, but nothing to do with the country fundamentals, but rather driven by the perception on the part of investors that Ben Bernanke is again delivering a dovish message here. In terms of the Mexican peso, this is clearly the most resilient currency in LATAM, especially from a medium to long-term perspective. I like the fundamental framework there. I like the credibility of policies. I like the fact that the authorities are really making a big effort to pursuing the reforms that we've been talking about. So ultimately, I think we could go back to below 12.50, and in fact maybe 12.25 on a 12-month horizon here. The peso has already bounced quite markedly, but this can continue over the medium term.
And Brazil raised rates last week, and this was expected, so it didn't really have that big of an impact on the real. But how is the real trading this week, and of course, what is affecting it? And do you think fundamentals signal further depreciation?
Well, the recent hike was fully priced in by the market, so I'm not surprised that BRL didn't have market bounce here on the back of the hike. What matters is the fundamentals and the credibility of the policy framework, and to me, those are rather poor, and that's why I'm flagging depreciation risks on the BRL. 230 is, to me, a credible target for USD BRL in the period ahead. Well, in terms of the Brazilian real, I'm quite bearish on a fundamental basis. I think there's clearly a risk that we see BRL going all the way back up to 230 in terms of the USD BRL. And the reason is there's a relatively poor credibility framework right now in terms of policies, and the authorities are really struggling with fundamentals here, poor growth picture and high inflation. So really a tough market environment or fundamental environment, and that makes me bearish on the BRL.
And finally, looking at the Chilean peso. Chile kept its interest rate unchanged, but many expect an interest rate later in the year. Now, it has been a pretty bleak 2 months for the peso on the back of the combination of Fed concerns and weaker commodity prices. But looking forward, are you feeling bearish, and what do you see for this currency? And of course, what will actually be the driving factors?
I'm bearish on the Chilean peso. Right now it's trading at 4.97. I can really see this going to 5.10 by the end of the year. The big risk for the the Chilean peso rather, is the China story. The China story is a major risk for the commodity producers, and we're concerned about the growth outlook in China with negative repercussions for commodity prices. And of course, that would expose the Chilean peso quite markedly in the event of such a shock.
Thank you very much for that. Well, viewers, do stay tuned to Dukascopy TV for more economic updates and forex analysis. But for now, goodbye.